So good afternoon, everyone. I am Gabriel Masangkay, and I will be hosting this interview session. We are from 3 Economics 2 of the Department of Economics in the University of Santo Tomas. This interview will be part of our completion of the requirements for our subject financial economics. I am very excited to introduce our speaker for today. After graduating from European Business School London, he worked as a credit risk analyst and afterwards became part of the equity sales team of Benelux. Currently, he is based in the Philippines and is the Chief Financial Officer of Victor Consunji Development Corporation. Everyone, let us all welcome Mr. Ralph Van Miert. Good afternoon, sir.
Afternoon.
So, sir, could you please give us a brief background about yourself?
Sure. Obviously, I'm from the Netherlands. Currently, I'm 49 years old, so I've been in the industry for over 20 plus years now. I started at the European Business School to focus on economics and finance, which was a 4-year university degree with a BA honors graduation. Obviously, I've been in many jobs, as you guys probably saw from my LinkedIn profile. It's very common in London to move around every sort of 1 or 2 years, because if you do a good job at one investment bank, then you get headhunted to join another one for obviously more money and more perks and everything else. So that shows why there's a lot of movement on my CV, and it's a very normal occurrence. I moved to the Philippines in 2010 with my wife and at that time 1 son. The plan was actually to go and retire for a while, but then we basically bought our house from Victor Consunji Development Corp. We became very close friends, and he asked me to join his company to sort out and clean up his finances. And that's how I sort of ended up becoming the CFO here in the Philippines of his company.
All right, so thank you for that, sir. I am sure my classmates are already very excited to ask their questions.
All right,
so
go ahead.
Before we formally begin, if I may ask, why did you choose to enter the finance industry?
I was always fascinated with numbers. Also, what's influenced financials, what influenced stock markets, all the graphs and everything to me was always like super exciting to see before I even started working. So the other thing with finance is it's never wrong. It's either wrong or it's right. There's no middle way in finance when you're building spreadsheets or if you're doing calculations or anything else. You're either right or you're wrong, otherwise it won't match up. And for me, being a very practical and maybe black and white person, it suited my personality also. So it was always I already knew from very young on that was something what I wanted to do. My family is from a background also in setting up their own companies, growing them, making them to very successful operations. And it was always something that wasn't really my kind of thing, but I did like the finance side of the things. I always had to work for my money. It was never given. So yeah, the finance industry and the money that's involved, and it was always very, very exciting. And to work with people that, you know, are at times definitely smarter than you are is also a great way to grow yourself and become even more knowledgeable in the industry. It's not an easy industry, let me tell you already, especially in investment banking or equity sales. It's very high-paced, very competitive, but if you work hard and you perform well, it's a very rewarding industry, and that's one of the reasons why I went into finance. And well, since I started, I haven't looked back anymore, and I'm still enjoying it up to this day. So I guess I made the right choice.
All right, so thank you very much for that, sir. So for our next question, we will have Paul.
Afternoon, sir.
Hi, Paul.
Yeah, hello, sir. So we've seen on your LinkedIn profile that you've worked as a credit risk analyst before.
Correct.
What did you exactly do as a credit risk analyst?
Okay. Basically, I take a step back. So when I graduated, there were several options for jobs available for me. Some with higher pay, some with lower pay. But my ultimate goal was always to become a equity sales person. So I advising pension funds and hedge funds, etc., what stocks they should buy or sell, etc. So even though some of the other jobs had a better pay, I chose credit risk because it's forced me to expand into something that I wasn't very strong at yet, which is you have to analyze your clients. So you have to look at their balance sheets, you have to look at their history, you have to look at their potential. And based on all the information that you get from that, you have to decide if it's a viable client to the bank that you're working for. So for instance, if it's a pension fund, you would look at all their you would look at their balance sheet, of course. You would look at their liquidity ratio, which shows if they have enough funds or not, if they're healthy or unhealthy. And you would look at their portfolios. So that allows you to make a risk assessment to say, okay, if there would be a certain economic impact on their portfolio, what would the risk be to us as a bank if they hold those positions? So we would then set, I would then be recommending to set a certain trading limit. So these would be daily trading limits. So let's say if the company was very, very healthy, they would have a daily trading limit of $10 million plus or even higher, depending on the size of their portfolio and their liquidity. If at some point they breach that, then it was my very unhappy task to go to the trading floor and tell the particular sales trader that deals directly with our client to stop trading. And that's happened a few times, and I can tell you it's not a very pleasant experience because the traders will get very angry because obviously if I stop them from trading, they can't make more commission for the bank and increase their bonus. And on the other hand, the clients won't be happy either. So the only option for them was to either unwind some of their trades to bring their limit down for the day, and then they can continue, or they have to wait until the next day, whereby it sort of starts all over again from zero. So it was for me a way to get to know that side of the industry, which is important being an equity salesperson at some point, because you also have to start dealing with analysts who will run you through all the ideas, and they will run you through the balance sheets of those companies that we are going to advise clients to buy or sell. And it got me already also a feel for how it would be to be part of a trading floor. So dealing with equity traders and equity salespeople. So it was also for me a way to start making contacts to at some point be able to roll into the equity sales job, which happened after, I think it was about a year or two, when I was allowed to, or was able to join a different company as an equity salesperson, obviously still being very junior.
Sure, that sounds like a lot of work. So it's also very interesting.
Yeah, it's definitely it's very hard work. It's very long hours, but if you're willing to invest in the first few years of your career, it's all worth it, because those in the first few years when you started, that's when you build the basis for yourself. You build the foundations for your future career. And I think some people, they jump in too fast. They have a certain target in mind, and that's what they want to focus on. But they sometimes forget to just take one step back and make sure that they're fully ready for the job that they actually want to, that someday roll into.
Sir, I'll take note of that. Thank you for the explanation. So for the next question, we have Colleen.
Okay.
Hello, sir. Good
Hi, Colleen.
afternoon.
Hi.
So this is my question. Have you had any experience with a client who is new to investing in stocks and had little to no knowledge about If not, how would you have guided them with their investment decision?
All the clients that we dealt with were actually professionals. So they're all institutional clients, which means they all have to have a certain trading license, or they need to have signed a competency form. So they were all certified as being sufficiently knowledgeable to do what they would like to do with us as a bank. However, not all of them were very knowledgeable. So you still have the task as a equity salesperson to educate them also. So there have been a few cases whereby, they picked a certain company that they would like to invest in via the stock market. The problem is they really didn't know what the company was exposed to. So it was based on, okay, the company sounds nice, it looks nice, it's been performing great, so why don't we buy it? Well, obviously that's not sufficient enough to make a sound investment, especially you're investing money from people, from pensions. So it's also our job also to make sure that they, or at least try to make sure that they make the best investment decisions possible. So there have been cases whereby we've had to educate them, or what we do is if we feel they're not fully informed, we, for instance, because we have an entire analyst team that obviously analyzes each and every company that we advise, that advise us, okay, these stocks are really hot, so you should push them to your clients. These stocks are complete dogs, so please tell them to get rid of them, etc. So we would then set up meetings with our analysts to have them explain to them, okay, the company that you have in mind is not a good investment because of the economic situation currently is not going to help this company. It's actually going to underperform in the next 6 months, for instance. So that's how we would help and try to educate the clients to make sure that their decision is the right one. But trust me, a lot of these investors are extremely stubborn. So we've had cases whereby it's very clear that they shouldn't invest in it. They will still go ahead and do it anyway. And then when we are right, it's not like we tell them, you see, we told you so. They will come back and say, okay, you guys actually were right. And the next time it becomes a much easier proposition because they'll realize, actually, these guys know what they're talking about. So maybe next time we should listen and take their advice. So it's a relationship building exercise as well.
Thank you so much for that detailed answer. May I call on my classmate Carlos for this question? Thank you again.
Hello, sir. So, to ask you my question, sir, in your professional opinion, what are the types of investments that are worth investing in locally here in the Philippines? It could be in equity investments or any other form of investments. And to follow on this, since you've been quite familiar with foreign investments, what are the types of investments that you think could be popularized or implemented here in the country, where the government and also private entities, where this could be companies or maybe even individuals, could further capitalize and further develop on to yield greater rewards for its investors?
All right. Okay, I'll start with the first part. I always believed that the stock market should, as a person, you should invest in the stock market as early as you can. Equities or the stock market, it always grows. So what I tell a lot of people or younger people when I meet them, or they ask me, okay, what should I do with, I have a certain amount of money that I want to do something with for the future. I always tell them, don't buy, if you can, individual stocks. Try to buy the stock market itself. So you buy a basket of stocks, because the stock market as a whole will always grow. Individual companies will have great performances. Sometimes they will have setbacks. So in order to be safe, especially if you're younger and you're not needing the money until you're looking to invest it until you're 40 or 50 years old like me, then it's a very interesting proposition. So equities, in my view, is always good to have that on the side, not having to worry about it. So if in 5 years the market goes down, don't start panicking, because it always comes back. If you look at the history, at the greatest depressions that we've seen, or market crashes, it's always the panickers that lose money because they sell. The people that actually stay in there and actually add even more to their current portfolio are the ones that are always the winners in the end. So it's this panic, like this flight almost attitude, and it actually makes them lose money. And then by the time they realize that they actually were wrong, then they want to get back in, but the market has already gone up again. So that's just a personal tip that I would give all of you guys if you're looking to do this in the future. Other things, I mean, house and lot, always the most valuable, especially in the Philippines. I would never buy condos. I think the condos here, for instance, is one of the biggest bubbles in the world. And I think you can see it now. With the whole pandemic going on, everybody's trying desperately to either rent out their apartments, trying to sell them, etc. And everybody's trying to buy house and lot at the moment, because with the lot itself, that always has a fixed value. Land prices remain pretty much stable or even increase, especially during downturns. Like for instance, during this COVID, land values have gone up quite significantly, as well as the house prices also, because people are trying to get out of the city. So you could see this as one, I think it's one of your questions you're going to ask at some point regarding macroeconomics. This is a typical, like a classic macroeconomic sign that if something goes wrong, there's always somewhere else or somebody else that benefits from it. So house and lot is always a very solid investment. Don't buy cars because they always go down in value. Unless you buy a Ferrari, then you're good. Specific industries, it really depends, because it's industries are very cyclical. If you look now, for instance, at the property development companies, look at DMCI, SMDC, they're all having a very, very hard time because nobody wants to buy their condos anymore. A lot of these condos have been turned over, but unfortunately, a lot of people have been laid off, so they can't afford it anymore. So you have to look for stable industries, and that could be, for instance, food. I know especially here in the Philippines, food is number one above everything, right? Like maybe after basketball, sorry. So I think food companies are always safe, because my dad always said people always have to eat, and that's true. So the food industry is a very solid and reliable industry. So those are sort of the industries and the things I would be looking at from that point of view. Then the second part of your question, I got it here. For the country, so by the government and the private entities. I think one thing that would significantly help, especially the Philippines, is actually, it's going to be a very hard thing to do, because there's still a lot of anti-foreign investment attitude. And that's obviously for historical reasons. But I think if the Philippines would open up much more for foreign investment and also allow foreigners to buy land, for instance, that would significantly change the entire landscape for the Philippines, because the inflow of capital would be enormous. If you look, for instance, at Vietnam, they were very similar probably about 10 years ago to the Philippines, whereby a lot of things weren't allowed, like foreign investment, foreign ownership, and all these sort of things. When they changed that, the Philippines just stayed here, and Vietnam just went all the way up here, purely because of that reason. And it can still be controlled. You could do 50% ownership, or you can put other restrictions on it, especially also for corporations. For instance, here, a foreign company has to be 50% Filipino owned, or 51%, I think. Other thing, I think you guys all know the the infrastructure here is way behind versus a lot of other countries. There's no proper train system, metro system. The roads are jammed to the brim. So that affects a lot of companies, their income, because if trucks or deliveries have to go and your roads are always jammed, they could probably do half the deliveries that if the roads were nice and free and flowing, like in a lot of other countries. So I think infrastructure is a very important thing to develop further. And once all these things start materializing, investors will also become more interested in the Philippines because they will see things are improving. The prospects of setting up a business here looks much better. The income that can be generated from the Philippines. So it's all linked to, investors seeing the progress that a government is making.
Thank you for that, sir. I'm pretty sure that a lot of our batchmates were really interested in that answer because some of us are really inclined right now in stock markets, and also if ever one day we get to be empowered in creating policies, we're sure to consider those types of suggestions. Thank you a lot, sir.
You're
So for
welcome.
the next question, we're going to be calling shots. So shots, take it away.
Good afternoon, sir. So
Afternoon.
my question is more on the context of the pandemic. So as we can see, due to the pandemic, the US experienced a massive decline in its GDP, experiencing high inflation rates and as well as unemployment rates. But in contrast, their stock market indices seem unbothered by their economic environment and even reaching all-time highs. So what I want to ask is, do macroeconomic factors have direct influence or have any bearing towards the performance of stock markets? And if so, what economic indicators should investors look at to help them in their investment decisions, especially during the times of the pandemic?
Okay, good question. I think actually it's not just the US that's having this current experience. I think all countries are sort of in a similar position whereby everything seems to be against them, yet the stock markets are all-time highs. If you look at the US specifically, like your question, I think the Nasdaq just reached its all-time high ever. A 10% unemployment rate, GDP decline, I think it was 32% plus. So every sort of sensible soul would probably run for the gates and take their money out of the stock market. Yet the stock markets are reaching an all-time high. So people can see beyond the stock market and the influence of the pandemic. And you have to also remember, a lot of people actually can't do much at the moment. So they're stuck at home or they're working from home. So they'll also naturally join the stock market and invest because it's a fun thing to do. And a lot of people, everybody wants to make a bit of extra money, and the stock market is a great way to do that. Another one is, the US has at the moment one of the lowest interest rates in the world, except for the Netherlands. But I'll tell you guys about it in a second, which is might be a very interesting case for you guys. The 10-year yielding is at 0.6%. It's nothing. So there's almost no point having your money in the bank because you're not going to earn anything from it. It's just sitting there. So naturally, people want to, use their money and grow their money. And one of the easier ways or more accessible ways is the stock market, because you can invest small amounts of money. You don't need to be rich. You can put every month, you could put $100 in your trading account and just grow it over time. So that's also a huge boost to the stock market. Then in the US also, their monetary stimulus is ridiculous. There's so much money being pumped into the stock market that just pushes it all the way to the sky, which is currently happening. Everything is being subsidized, everything is being pushed. So of course, this gives a huge drive to the equity market. And that's in a lot of countries also, not just in the US. So if you take all these things into account, I'm not surprised that the market is all the way up. And it will probably continue for quite some time until everything starts to stabilize. People will start realizing, oh my God, these companies are way too expensive. Their P's are like 10, 20 times their earnings, you name it. So at some point it will trace back. There will be a correction when people start, taking some of their money out of the market, which is a natural thing to do. And then it will just continue again. It will just plateau at a new level, and then we'll just go all up again. So macroeconomics definitely has an effect on the markets. The problem is they're very hard to predict. Like for instance, COVID, nobody could have ever expected that to happen, right? So other things you can predict, you can predict employment levels in a certain way. You can see how well the companies are doing, if they're hiring, if they're growing. So those are sort of the things that you can have some sort of prediction on. Interest rates, you could also have a prediction on that because they're set. You have your monthly meetings. You can take from there sort of roughly what the central banks are thinking, where they're thinking of going. So yeah, I think a lot of the macroeconomics are definitely a huge influence, but to be fully, if you can fully, anticipate them? No, I don't think anybody really can in that sense, but you can at least try to have a good sense of what's going on around you and use that when you make your decisions going forward.
Thank you so much. That was quite insightful, especially with us having limited knowledge on what's going on within the US. I'm pretty sure not much of us know about those contexts.
Yeah, and I'll give you guys a very good example of a macro environmental situation. So I'm from the Netherlands, right? So in the Netherlands, there is a negative interest rate. Now that might sound really weird to you guys, and trust me, it does. It basically means if you put 1,000 pesos in the bank, at the end of the year, you will have to pay a certain percentage of that to the bank for your money to be in the bank. So you lose money. So in the Netherlands, the current economic situation is very simple, as you can probably imagine. Nobody wants to keep their money in the bank because if you keep it in the bank, you lose money automatically because you have a negative interest rates. So the situation there is that the stock markets, again, is being invested in very heavily. House prices are at the all-time high and still getting higher by the day. Average couples that just start out, just gotten married, want to get their own place, you name it, they cannot afford it anymore because the houses there are, beyond their reach, even with a good, decent job. So that's a classic example of a macroeconomic indicator, how that affects an entire country, basically. So it's just an interesting example, maybe for you guys to bear in mind how it's, sometimes if you're trying to think of macroeconomics, for me, this is always a very easy and simple way to show how it affects everybody in that particular country.
Hello, sir. I would just like to have a follow-up question.
Sure.
Do you think that the growth of the U.S. market indices are unsustainable? Are the U.S. markets bound for correction already? And if so, what would that mean for the PSEI or the local stock market in the Philippines?
I think there will definitely be a correction. I think the correction will come once this whole vaccine program really gets underway properly. Everybody's still struggling to get their vaccine programs organized and up and running. And I think until people see that, they will still continue with investing. The companies will start hiring again. So the unemployment rate will have to go down at some point. So I think overall, once everything starts settling, it will then refocus the people's minds back to the valuations of the stocks and the actual stock markets. And they will realize that all stocks most of the stocks are severely overpriced. So once that starts filtering through, there will be a correction because people will say, why am I paying this much for this particular stock? But the earnings are not matching with what we're paying for it. Once that starts coming in, then people automatically start, pension funds, hedge funds, large investors, they will start taking money out of the sectors that have grown the fastest. So technology sector is obviously has been a huge growth market. They will start taking their money out and they will just reallocate those funds, or in some cases they will just keep it as cash on their balance sheets, wait to see what's going on around them, and then they will reinvest once the market has corrected, or they will reinvest in safer, maybe a bit slower grower industries until everything has settled down, and then they will shift their funds again. So I think there will be a correction. I'm hoping it's not going to be a huge one, but I'm always keeping my eye out, since I still do my day trading on the side when I'm bored. What effect it has on the Philippines? Despite all this, if you see what the foreign remittance levels are at, they're still very solid. Sure, they have obviously suffered because a lot of people have lost their jobs, or they had to come back here, or other reasons. But I think the Filipinos are also very smart with their money. They always like to grow their money. Like, if I've learned anything here, they always want to try to make the most of their money. And that's a great quality of the people here. And I think they will always look for opportunities and invest and try to help their families in that way, to make sure that everybody's provided for. So there will always be this natural stimulation to grow their money. And I think the stock market here is a great way to do it. And especially with all these online trading companies, you got Cole Financial, you got BDO, BPI, you name it. It's so easy to set up. It doesn't require a huge amount of money. So I think if there's going to be a crash in the US, sure, it will also bring down the stock market here, because it's a natural reason. Everybody looks at the US stock market as the benchmark. But again, that will also come back, once everything starts recovering again. So I think overall, there's always, they say love comes in waves. Stock markets also come in waves.
All right, sir. We will surely keep an eye out for that correction.
Sir,
Afternoon.
you've mentioned career building earlier. I myself, and I guess most of my classmates here as well, want to know how to build a career in our field. As an economics graduate yourself, what industries would you recommend we delve more into once we graduate, especially in the case of the Philippines?
Interesting question. I think first and foremost, you have to choose something that you'll enjoy doing. I mentioned before, a lot of people, when they get job offers, they tend to choose the one that pays the most. When I chose my job, it was actually the one that paid the least, but it gave me the best foundation for what I wanted to achieve. So that would be my first thing to say about that. In terms of industries, obviously, all industries are extremely cyclical. It gets influenced by all sorts of factors. I've always enjoyed working for the financial industry, so banks, investment firms. One of the most rewarding, if you can put in the hours they are willing to sacrifice for quite a few years, could be in equity finance. Those guys are extremely aggressive, but the rewards could be enormous if you do a very good job and you start there as an analyst, where you build up your reputation. You advise the portfolio managers within that equity firm, or even in an investment bank for that matter, what stocks you recommend or industries. And from there, you can transition to become a portfolio manager. So you'll be in charge of an entire portfolio, and that could range from $100 million to $1-2 billion, depending how well you do. So obviously, like I said, if you're willing to put in the hours and the hard work, then that's definitely a very interesting industry to be in. And I think especially equity finance here, it's still still in its very early days. It's still developing. If you look, for instance, in London, the private equity sector there is enormous. When I was still working there, they were all starting up. And these younger guys, they had like billions of dollars under management. And they could play around it however well they looked like. And nobody would ask them questions as long as they achieve at least a 30% return. The investors would be happy. They pay their own bonuses. it's an incredible sector to be in. Here in the Philippines, it hasn't really developed so far yet, but it's definitely something to look at. Those two for me, like the banking sector and the private equity sector, are extremely interesting. Is an extremely interesting sector to work in, especially if you're just starting out.
Thank you, sir.
Welcome.
All right. So with that, we would like to thank you, Mr. Van Miert, for this opportunity. We are very much honored to have with us such an experienced practitioner in the field. So to wrap up this interview, we will have one last question from Mika.
Okay.
Hi.
Hi.
So from someone with your stature, what's the most important or essential advice that you could give to us as future practitioners in the field?
I think I already mentioned it. Like I said, make sure that you choose something that you would want to do until the end of your career. Something that makes you happy, makes you want to get out of bed for. Not because you have to, but because you actually want to. I've seen many people around me that's doing that job, but they're doing it for the money. And that's always the wrong reason, because, you know, money is great, but if you actually don't enjoy your job, it's going to be a very long and lonely road just to stay in that job. And I've seen other people do it, and it only lasts for a few years until you start realizing, I should have taken a different path. So don't choose the money, choose something that you love doing. That's really the most important thing, I would say. Once you get there, work hard, always be respectful, be kind, appreciate your fellow workers around you. Doesn't matter if they're above or below you in whatever level you are, from our messengers up to our CEO. Always be kind and work hard, and you'll get the rewards. Don't go AWOL ever. And just enjoy what you're doing. And if you don't, make that change straight away. Don't let it fester until you realize, okay, now I'm really depressed, I need to get out of here. And you'll prosper. All of you guys will, and you'll have a great future and build great careers.
All right, thank you. We'll take that. We'll keep that in mind.
You're welcome.
All right, so that concludes this interview. This has been such a wonderful session. Again, thank you very much, Mr. Van Miert, for your time. Before we part ways, may we have a photo op with everyone? All right. 1, 2, 3. All right, okay.
Send it to me, please.
Okay, sure.
Thank you, sir.
All right,
thank you very
great.
much.
Thanks for your time, guys. Good luck with your studies and your careers.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you,
Bye.
sir.
Yes, sir.